Starting from tax periods beginning from the year 2026, many qualifying free zone persons who distribute goods or materials could lose the valuable 0% corporate tax benefit. Not because the law changed, but because they didn't follow new set of practical compliance steps. I am Manu Palerichal with you from CLA Emirates. And in the next 5 minutes, I will explain FTA decision number 6 of 2026 in simple terms, what it means, what you must do, and how to stay compliant without unnecessary stress. This decision issued on 2nd June 2026 adds clear procedures that qualifying free zone persons engaged in distribution activities in or from a designated zone must follow. The goal is simple: to prove that your distribution income genuinely qualifies for the 0% tax rate under the existing corporate tax rules. Without following these steps, the Federal Tax Authority may treat your income as non-qualifying, meaning you could end up paying 9% corporate tax instead of 0%. It applies to all tax periods starting on or after 1st January 2026. So, if your financial year begins in 2026, this already affects you. The core requirement is that you must obtain an agreed upon procedure report from an independent external auditor every year. This is not a full audit opinion, it's a factual report prepared under the international standards called ISRS 4400. You can engage your existing auditor or any other licensed auditor in the UAE. The report must be submitted to the Federal Tax Authority no later than 30 days from you file your corporate tax return. If you miss this deadline, the FTA will consider that you have not met the conditions of 0% tax. That's the risk. The report has to demonstrate two key things with the factual findings. Number one, a finding that your customers are resellers, meaning they buy the goods to sell them onwards or to process and resell, or in some cases to donate to a public benefit entity. It's your responsibility to prove it to the auditor. I will categorize the documents into 3. Number 1, your customer should be reseller. Hence, maintain documentation such as a valid trade license or commercial license or similar document of your customer that proves that they do activities like trading, wholesaling, retailing, distributing, manufacturing, anything indicative of reselling activity. Number 2, signed declarations or written confirmation from customers stating that the goods or materials are acquired for sale or resale or for donation to a public benefit entity. And number 3, the auditor will also verify the sales agreements, invoices, purchase orders, or other transaction records that collectively demonstrate that your customer resale or onward the supply activity. The second point, the auditor should find that any goods you imported into the UAE actually entered through a designated zone. To support this, you need to maintain proper documentation throughout the year. I will categorize this into 3 types. Import declaration. Number 1 is import declaration and customs clearance documents moving lawfully entering through designated zone. Number 2, shipping documents such as bill of lading, airway bill, or equivalent document clearly indicating that entry through a designated zone. And number 3, internal records such as inventory logs, warehousing reports, goods movement records, and logistics documentation showing the goods were received, handled, or stored within a designated zone prior to the distribution. You don't need to give the auditor every single document. The auditor will check a calculated sample, but not randomly. They must select the customers and imports with the highest transaction value first. The sample size is calculated using a formula with a 10% margin of error. For example, if you had 200 customers during the year, the auditor would need to check minimum 67 of your largest customers. The same logic applies to your import shipments as well. This value weighted approach means the biggest transactions get the most attention, which makes business sense. If you have only 10 customers or imports, sample size would be almost 100%. Means auditor needs to verify all documents. If the customer or imports are around 50 in number, sample size is 33. If it is 100, the sample would be 50. That is exactly 50% of the number of customers and imports documents are to be verified. If the number is 1000, sample size will be 91. In simple terms, at any time, the sample size will not go above 100 number of high value customers or 100 number of high value imports. Here is what smart companies are doing right now. First, speak to an external auditor, ideally now itself, since 6 months already passed from the effective date. So they can explain exactly what they need and when they need. Number 2, strengthen your customer onboarding. Make it standard practice to collect trade licenses and sign the reseller declaration form from every distribution customers. Third, improve your warehouse and import file documents. Every customs paper and shipping documents must clearly show that it was imported through a designated source. And finally, maintain a simple master register of your customers and imports sorted by transaction value. FTA decision number 6 of 2026 is not about creating new taxes, it's about proving that your distribution activity genuinely qualifies for 0% rate you have been enjoying. The companies that start preparing now will have a smooth process. Those that wait may face rushed work, high cost, and unnecessary tasks. If you are a qualifying free-zone person doing distribution activity, I strongly recommend you review your current process and book a discussion with an auditor this month itself. Thank you for watching. If you found this helpful, reach out with any questions, stay compliant and take care.